trusts are not being used as much today. What are you kind of seeing big picture? Because trusts is one option, but then other higher level tax planning strategies like permanent life insurance, surplus stripping, charitable gifting, of all of those, like what are you seeing the most of or more of in today's
Yeah.
landscape?
So in a high net worth space, we're dealing with clients, let's say 25 million or more. I mean, really, there's not a lot left once they've done the RSPs and TFSAs and they've done all the debt and all that. So things like permanent insurance, typically whole life insurance strategies. We call it insurance for people who don't need insurance, right? That's very, very effective. I think that works really well. Setting up a donor advised fund to make substantial charitable gifts in high tax years, setting yourself up for a lifetime or even generationally in terms of future gifting is certainly another strategy. And then I would just add that, I mean, even though we're not seeing the trust set up so much for income splitting today, we're still seeing trusts set up every week. And they're setting up for the non-tax reasons, the ability to have control, especially in cases with second marriages or multiple families, and you want to protect assets for the kids of the first marriage rather than leaving it to the new spouse or partner. We're seeing a trust work very effectively there. That could be part of the will, right, where the money goes, in your will, some of it goes to the current spouse, some of it goes to the kids. It can be done using a testamentary trust as part of a will. We're seeing it in the cases of providing for kids that are not good with money. They might spend the money. They may have addiction issues, things like that. So I think trusts are as popular as ever. We're just not seeing it so much on the tax side in the last 6 months because of the rise of the prescribed rate. But trusts are still a very valuable part of an estate plan because they provide many, many non-tax benefits that you cannot achieve otherwise.
I'm glad you commented on that. Last thing, I know for the foreign inheritance trust, you mentioned a foreign relative maybe being very, very wealthy. But let's say years down the road when the prescribed rate comes down and then trusts are used more for income splitting purposes, what type of client would you see benefiting from this? Because I want listeners to be able to at least walk away from this and be able to say, would this be useful for me one day? Like, would this be more for clients who have multiple hundreds of thousands of dollars of like personal cash lying around, or are you seeing it used by people who maybe have like 50 to 100,000 kind of lying around?
Definitely
They want to
not.
use it for the kids.
No one's doing this for 50 or 100,000. I've never seen it done under $500,000, to be honest with you.
Okay.
So I'd say if you got $500,000 of cash lying around and you're in a high bracket and your kids have lots of expenses and they're in zero brackets, that's the perfect scenario. That's where we see these type of things used. Most of these prescribed rate loans are in the $1 million range, million, 2 million, that type of thing. That's where we see most of the benefit from these prescribed rate loans, especially via a trust.